Hello guys, welcome back to my channel. This is Soji and you are welcome to Soji Forex. Thank you guys for subscribing to my channel. To all our new subscribers, I want to say welcome to this channel. We are glad you join us and we are glad you are part of this big family. So today I want to make a simple video on how to filter our entries by taking a higher probability trade. How to take a high probability trade. High probability trade. And this will be part 1. So it's a series. I noticed that most of the time we try to make entries, but unfortunately we are having challenge with it. So today this video will be filtering how do we take trades that have high probability entries. So I'll be introducing us to two types of candlesticks. The first is pin bar. Our first type of candlestick is a pin bar. Okay, we're looking at pin bar and engulfing candlestick. A pin bar and an engulfing candlesticks. So let's look at what pin bar is all about. What is a pin bar? Okay, now the type of pin bar we are talking about is this. So now this is the type of pin bar we are talking about. This is a pin bar. The pin bar is a candlestick with a body. Okay, this is the body. So a pin bar is a candlestick with a body, alright, that have a wick. This is the wick. So what this wick means is that there was a time that sellers were in this market and then sellers pushed the market and push it all the way down here. Okay, then buyers came back, pushed the market. Buyers came, they keep on pushing the market, push it back until the price closes at this point. And that is what resulted into this wick. And what this simply means is that it's showing us the strength of a buyer in the market. This is showing us the strength of the buyer in the market. So an ideal pin bar must have the wick, which is this rejection sign you are seeing, must be at least 2 times of the body. Okay, what I'm referring to is that the wick from here to here, this is the body, right? And then from here to down here, here is the wick. This is the body, right? So what it means is that the body must not be up to the wick. That is the wick now, which is the point of rejection that we are seeing down like this. This wick must be at least 2 times of the body. The wick must be at least 2 times of the body. So that is a valid pin bar. Okay, now the color of the body is not important. Okay, even if the body is bearish, even if the color of the body is red, now even if the body looks bearish, but in as much as from the wick is 2 times the body of this candle, and it happens, is a buy. Okay, it means it is a buy. All right, and anywhere you have double of this, okay, you find 2 of them and they are side by side, is a better entry. When you find these 2, it's a more precise confirmation. When you find the 2 of them side by side, it's a more confirmed entry. Okay, so that is it. Okay, then the opposite of it is for a sell. What do we mean? When you have this and you have this, okay, the wick is 2 times of the body of the candlesticks. This wick from here to here, it must be at least 2 times of this body. That is one. The second type of candle we are looking at for our entry is the engulfing candlestick pattern. Engulfing candlestick pattern, and these are candles with a big body. Okay, they are candles with a big body. Now this is how it look like. Now this is a bearish engulfing candle. So when you see it like this, it might have no wick, and it can have a small wick, but in whatever case it should be an engulfing, which means it should be able to cover the previous candle beside it. So it can have a small wick, and it is possible that it has no wick at all. Great. So this is an engulfing candlestick. Okay. So you can earn when you have these two or these two, among other confirmation that I'm going to share with you, is what qualifies your entry. Right? So we are looking at how we can take a higher probability trades. So this is it. Alright. So when you have, okay, let's say for instance, you see the market going down. You see this market, this is price coming down. Okay, this is price. Good. Now, this is the previous candle. Okay, this particular red one is the previous candle. Then when you get to that zone we are talking about, can be a Fibonacci zone, can be a support and resistance zone. However, I'm going to explain the zone I'm referring to. When you get to this zone, you find out that, or in an order block, you find out that you have a bullish engulfing candle, that the candles open and closes above the previous candle in that zone. Then you can see that this is the level. So the language engulfing means it covers completely every part of the previous candle. It covers completely every part of the previous candle. So when you find such a thing, it simply means it's an entry confirmation. It's an entry confirmation. Okay? Even if you should have, maybe you are having a pin bar, and then at the same time, where you are having a pin bar, you now have an engulfing candle. It is still a good entry. It's a perfect confirmation for an entry. Okay? And so maybe you are having this. Market has been going up and going up, and then suddenly you have this. This is going up, and then you now have a bearish engulfing that covers this previous candle completely. completely, which means it covers it completely. Every part of the previous candle is buried in this, in the area which you have marked as your point of interest, which I'll be sharing with you now. I want us to know how to identify these candles. Once you get this, it's a perfect entry. So we are trying to see how to filter our entry and get a high probability trade. Or maybe in another scenario, you were having this, and then this follows. This follows. Yeah. So you have this, and then you have this rejection forming a pin bar. It is still a more confirmed entry. Okay, it's a more confirmed entry. So this is a more confirmed entry, even if you have anything as this. Okay, and if this is what you got, it is still a more confirmed entry, and if it is this way, the entry is still okay. Alright, so engulfing candle and pin bar. Engulfing candle and pin bar. So I believe with this you can identify what an engulfing candle is and what a pin bar is. So if you have two engulfing candles, fine. If you have engulfing combined with a pin bar, good and fine. But what this means now is that you won't be taking any trade until you either get an engulfing candle or a pin bar. So you are not deviating from this anymore. Okay, and then there is two ways of making entry on the pin bar. There are two ways you can make the entry using the pin bar strategy. We see first, one of it is that you can make your entry at the close of the candle. Remember, the price open here, okay, without a body. Then sellers begin to push it down. Sellers push it down, buyers push it up, sellers push it down, buyers push it up, sellers push it all the way down here, and then buyers push and push and push and push, and then closes the price at this level. So your entry, there are two ways of trading, the three ways rather. Your entry is going to be at this point, at the close of the market. That is one. And your stop loss is up to 5 pips below the wick. Another method is you take your entry 5 pips above the open, which is somewhere here. You can have your entry somewhere at this region. You can send your pending order That is number 2. And then the third one is you can take 50% of this candle. Great, you see, here is your 50%. So you can set your pending order here. That is 50% of the pin bar. Okay, but in this video, what we are focused and concerned about is that our entry will be at the close of the candle, and the same thing is applicable to the engulfing candlesticks. So we are looking at how to get more precise and high probability trade as far as our trading is concerned. If you are somebody that trades a daily time frame, you can actually, at the end of the day, you open your chart. All you are looking for in your point of interest, the zone, is for you to see, do you have a pin bar? Once you get your pin bar, maybe you are too busy, you have a job, you don't have time to be checking your chart always. You set your pending order either above 50% or at the close. You put your stop loss below and then your TP, and this works perfectly well. Okay, I don't intend this video to be long. In the subsequent video, we will now be looking at how to combine this strategy on the chart to give us a perfect and a unique entry using this pattern. So please, I believe you are getting value from this video. Do not forget to like, share and subscribe to our channel. Turn on the notification bell so that you'll be the first to get notified whenever we publish our next video.